Good morning, everyone, and welcome to the European crossover webinar. And we've seen the dollar strengthen, continue to strengthen, trying to go into this rebound area here. We've actually made it here to the 78% right here. I've gone and added on to my euro dollar. We came in here, see, right here to the 78%, just popped up, going a little bit hard right here. Seen a pretty good rebound here in equities. And very key area right here, right up here to this 28.20. You can see here that's been in place right here, 28.19. Actually, I actually had that marked off before. You can see how important that area has been. And looky here, the dollar yen, it looks like it's going to go to the final thing we've been talking about here. We came pretty close on election night. And here we are. Remember, we said we really believed that we would get ourselves, it would resolve itself almost like a magnet to this 1389. Once again, as I told you before, I don't expect it necessarily to go up there and then just turn around and immediately reverse. I think it's just going to hang around here, and then going forward, we'll see which direction it really wants to break in. We did get some Brexit news overnight, although the cable's still hanging around up in here. It says, I think it was a newspaper report that they could possibly get something worked in the next few days. I think that'll also be beneficial for Euro if they do. And with Euro, certainly we've gone and pulled back here, and we're just kind of holding here in this lower area. We can go in and take a look at this where it sits on a retracement. Just about made it right here to the 50% on this pullback. The dollar index itself has made it up to the 78%. So the euro's fared better. This very key area right in here. And look at that Aussie, still holding up very, very well here. We've been talking about this for a long time, how weak this had been. And remember when everything was looking pretty bad in equities, the Aussie still wasn't making new lows. Remember how we said to go, and really we were looking at the time at the Kiwi and mentioned some huge, huge support. I think it was at the 12. And we had shown that before on the weekly, but we said how well, and we talked about this about over 2 weeks ago. We said, hey, look, the data's been coming out really well. 5.3% unemployment, retail sales, everything's been good. And I go, and but we're not seeing it reflected. I go, but we were saying, how it wasn't breaking down when equities broke down. I think everybody thought that the Aussie was going to really still slide, and it just didn't. And it was just so oversold. So now we've seen a pretty decent little rebound. And we said when policies diverge, that we could eventually make it up to about 75.5. Remember, we said things turn around, we'll make it up there in no time at all. And I think we can. It's right here that we would potentially come up here to 75.32. Once you start to see things start to go the other direction. We're already starting to see that now. Dollar CAD's still hanging around, but I think that the best days for it are over, I believe. We'll see how this plays out. I was able to get back above this little trend line. Like I said, I rarely ever use trend lines unless I'm looking for something to turn around, and we'll see how this plays out. But certainly looks like, it's held up as much as it can, but if the dollar starts to break, I think that we'll see a pretty good move here in the dollar CAD itself. Gold still kind of holding here at the, towards the lower band. Obviously the dollar's weighing on it. I still think that overall it's open to resolve itself higher. Maybe not so much, not to the same extent that the dollar yen is. And as I was telling you, is that when we looked at the price structure of the dollar yen, and I was showing you over time, I go, it just doesn't want to break why I thought it was going to be. And I think that's apropos, is to resolve itself to 1389. And it certainly looks like it wants to get here. Once it gets there, then I think that it will probably stall, and then we'll determine which way is the next break. I think the eventual break will be lower. And in time, if we do start to see, and I posted a report, let's start posting some of these reports, but there was, if you look on there around, it was early Asian session, gentleman was posting how the economy, although it looks good from the overall numbers, it does look like there's a slowdown coming up. Well, maybe not so much a slowdown, but a paring back, and that person was expecting a sell-off going into the end of the year. That may start to tip the hands, and eventually then we could probably see this move lower. And I think that when and if it does, it's going to go into the nines. We're still a ways up, but I think we'll get up here. It'll probably just hang around here for a while, and then eventually we'll look for the next direction. But it certainly looks like it wants to resolve itself to 1389, as we said. So let's go on and get into the news. We'll get into that, and then we'll go into the bias chart. We'll also spend some time on equities. Here's the mini Dow right here, but more importantly, what I saw was here was the, we'll get to that. And this probably explains part of the reason the dollar's still held up. But here on the S&Ps, if you look here, you look at the volume that's in place right here. See, right, all this coming across, some good volume, and while we're paring back. If we were to get above that, this kind of, I don't know, I think it was Stelios, I think it was, I'm not sure which one that was looking for potentially 28.45, and that was before we broke down a second time, and that makes sense. Look at all this volume here at 28.45. That's where they go to, 28.45, 24. You see right here, see this here and here. So if we had broken higher, that's where they would ultimately run to right now. If they took one more lunge, 28.47, anywhere between 47, 45. It looks like we're tiring out because you can see here some decent volume. That also matches where we are here. We'll see how things play out. But one of the things that probably did aid and abet the dollar is obviously we've had bonds turned down. They had turned down. Now they're trying to work up a little bit higher. Maybe this may slow the ascent for the dollar. But once again, I think that the dollar, we have some big issues going forward here on that. So we'll see how this works out. But I still think that we talked about this well before we had the election. Any moves back towards 50 would be sold. And I think we even mentioned 40. Let's see, was it? Let me see. Maybe it was right here. 40. We just about made it there. So let's take a look here. Probably any pullbacks, and I think eventually will work low. Don't forget, there's a ton of dollar bulls. So I think if we can't get any movement on here, then the market will just start to slide. But we'll have to go and get past some data today, and I think those things will work themselves out. So hang on. Let's go on and get into the news. So it says the Canadian dollar firms as potential U.S. political gridlock weighs on the dollar. The Canadian dollar edged higher against its U.S. counterpart on Wednesday as the greenback broadly fell after U.S. congressional elections. Obviously, it's coming back. But the lineage gains were tempered by lower oil prices. The dollar index slumped to its lowest intraday level in more than 2 weeks against a basket of major currencies after the election outcome of U.S. Congress split between Republicans and Democrats raised expectations that any major fiscal policy boost to the economy is unlikely for now. Given gridlock, you probably don't have as much scope for stimulus as you might otherwise have had, said David Stonehouse, which is one of the things that's also going to weigh on the dollar because, as I mentioned, one of the things that actually was going to, someone was asking why the equities were doing well. Also, one of the reasons is also because of that, they're thinking there's less likely, the idea is one goes after the other. So the idea that there's going to be less stimulus the thinking is that there'll probably be less of a need for the Fed to keep the pedal to the metal. Not that they won't, but I'm saying is instead of pricing in 3 more rate hikes, I mean, no, 4, then you pare down a bit. Well, we'll see how that all plays out. But I think in turn, like I said, it's just like a big ocean liner, and it starts to turn around. And we've had a pretty good run up here in the dollar, but when you look at it up here, like, okay, so if it's a big ocean liner, you still have a lot of longs. Then we start to roll, because you don't lose a whole lot of it on that first run. It's the second run where people say, you know what, it's still a buying opportunity, or I'm still hanging on to my longs. And it's the second one that gets things going. And then the third one is what we end up pushing lower. And then the market at that point says, oh, wow, okay, now it looks like it's a sell. Now we're going to get a pullback. But for right now, there's still a lot of longs here left in the market. But I still think we've hit a top here in the dollar. And there's a lot of reasons, like I said, what you can look for that are going to start to, work the other way. It's always in the back of people's minds that to some extent, at least, Canada is a petrocurrency, and undeniably oil has been soft recently. That hasn't helped the Canadian dollar. Once again, we talked about how oil being soft and why the dollar should have been stronger, and we just haven't seen the gains. We did get gains initially when crude oil broke, but those have kind of lost its luster. Canadian purchasing activities expanded at a faster pace in October as measure of employment and inventories rose, according to IB Purchasing Manager Index data. And like I said, if the dollar CAD were, let's say, at 128, that'd be one thing. But look at it. I mean, if we do get the Bank of Canada, and because as the economy continues to strengthen more, then, and we've covered that story, that the thought is that they're basically on the same path as the Fed. Well, you play a little bit of catch up. You don't have to even go that far. Just take it down to 128, and you're talking already 200 pips. But I think we can come eventually down here. It's going to take some time, but I think eventually it'll move lower here as the CAD plays catch up to the dollar and where it's at. Catch up in the sense is for both the central banks. Australian dollar up on robust China data, and the New Zealand dollar above a 3-month peak. The Australian dollar got a small boost on Thursday thanks to stronger than expected data from its trading partner China, while its New Zealand cousin stayed above a 3-month top as investors paired chances of a future rate cut. The currency had climbed a 6-week peak of 73 on Wednesday as the greenback slipped after President Donald Trump's Republican Party failed to gain dominance in the House of Representatives. On Thursday, official data, Chinese exports sprang 15.6% from a year earlier. The numbers were closely watched by the market, with China's economic outlook clouded by U.S. tariffs. Anything that is good for the Chinese economy is good for the Australian dollar, said Kyle Rhoda. We haven't seen a great deal of price action today, but any data that does support the notion that the Chinese economy is being supported and is stronger, that's a largely positive thing. We already covered that last week. Remember, we referenced that China was looking to do more stimulus, and then when they came to the big meeting over this last weekend, they were talking. Remember, there was a lot of emphasis. They were saying they want everything to be open. They said a winner take all doesn't do anybody any good. So they're saying all the right things, and all those things are going to be conducive for the Australian dollar. Now we're just starting to see this come to fruition. Let's take a look. Investors are keeping their eyes peeled on the Sino-U.S. trade war as leaders of the two countries head to a meeting at the end of the month with trade expected to feature prominently in discussions domestically. Markets will look to the Reserve Bank of Australia's updated economic forecast for growth and inflation on Friday. Governor Philip Lowe offered a taster on the outlook early this week, knowing that inflation would slightly pick up to 2.25. So that's just going to add a little bit more juice to the upside. The New Zealand dollar hovered near a 3-month high, and the bond sold off as the markets priced out any chance of a near-term rate cut, and instead focused on when the New Zealand would join some of its global counterparts in raising rates. At its policy decision, the RBNZ kept the official cash rate at 1.75. The RBNZ removed a previous line from Thursday's statement that rates could move in either direction, a signal that some took as a hawkish tilt. Well, there was a comment really along that line. I don't remember what it was, but it made me laugh because it almost sounded like the Bank of Canada. But anyway, we'll go back and move on. Sterling maintains gains despite report Brexit cabinet meeting delayed. The pound has benefited from signs Britain is closing in on a deal with the European Union less than 5 months before it's due to exit the bloc. It's still unclear if enough progress has been made in time to hold an emergency summit of the EU leaders in November to sign off on a deal. Against a recovering dollar, the pound edged at 1/10 to trade at 31.50, just below a two-week high of 31.76. The FX markets still seem to be hoping for an amicable agreement, as a glance at volatilities illustrates that it remains quite relaxed as far as March 2019 is concerned. However, I urge caution. There's still resistance with the British cabinet. A crucial cabinet meeting on May's proposed deal with the EU, meant to take place this week, was delayed amid a row over whether to provide legal advice to ministers on custom backstop, The Guardian reported. If the cabinet does agree to May's deal, an EU summit could be held before the end of November. And really, it's in the interest of both parties. I know, like I said, we had really come off, and I kept saying, I know there'll be something done. There'll be something done, but it certainly did look like it once we got past the 78%. But you know what? The Eurozone isn't in a situation where they can, a good bargaining situation. They need the deal just as bad as Britain does, in a sense, if not even more so, if that's hard to believe, but it's true. They're not in a position of strength to be holding out too much, so I think that ends up getting done. A backstop has been deemed necessary to ensure there's no return to a harder border in Ireland if the UK and the EU are unable to secure a long-term trade deal after the end of a Brexit transition period in 2020. Headlines on the progress of Brexit talks have made the pound increasingly jumpy. Implied volatility at 1 month pound options, a gauge of expected swings, is at its highest level since February. Oh, by the way, in regards to the euro, I think Simon had shared it. But anyway, there's a lot of options, and a huge, big option at 115. And again, tomorrow, I think Simon put, I think it might have been like 6 billion or something. So one of the reasons I think they're going to keep this euro, every time it tries to bob its head, they're probably just going to offer a lot to try and keep this lower until we can get past this week's, and then they can open the door for this to move higher. I'm surprised even that it's even this week, in light of how things are going with cable. That'll probably eventually, if we get that lift, that's going to be very, very positive for the euro. Take away some uncertainty. Brexit deal could be reached in the coming days. Austrian newspaper London and Brussels could reach a deal on Britain's looming departure from the European Union in coming days. Austrian newspaper Der Standard on Thursday cited European Commission sources as saying, said the sources had made the comments on the sidelines of a meeting of the conservative European People's Party in Helsinki, where leaders have gathered to elect a frontrunner for next year's European Parliament elections. And on to the dollar. Dollar extends recovery on post-election relief. The dollar rose on Thursday, pulling away from 2.5-week lows hit on Wednesday as the market breathed a sigh of relief after the U.S. midterm elections. The Federal Reserve is expected to keep interest rates on hold, but signaled further tightening in December. Alice said that with the U.S. midterm elections producing no major surprises, a central bank sticking to its tightening path should support the dollar, while the euro will likely remain under pressure from concerns from Italian debt. I completely, 100% unequivocally dispute this. That leaves the door. That doesn't even make any sense. That leaves the door open for the central bank to keep on raising rates. That doesn't even make any sense. I'm saying is because one of the thoughts was the dollar would get a big boost because then it would open the door for Trump to continue to do more stimulus or without any concern. If you think the House is going to go along with any further stimulus, you've got rocks in your head. So no, this doesn't even make any sense whatsoever. If anything, that's why equities have pushed higher, because the thought was, is that now with the split, is that there's going to be less stimulus, and it opens the door for the Fed not to have to be so, keep the pedal to the metal. It's going to lessen some of that pressure because you wouldn't have that stimulus. So this makes no sense whatsoever. Okay, tails you win, heads I win. I mean, was it heads I win, tails you lose? That is just nonsensical. To be quite honest with you, the election results were in line with expectations. That mean the Fed can go on its way, said Alvin Tan. Once again, like I said, this doesn't even make any sense. That will the Fed continue to hike? Yes, but once again, it relieves the pressure because you're I want to say less likely, you're not going to get any more further stimulus. It's not going to give the administration any type of stimulus. So if anything, now the market has to just the economy will just go on its own without any further additional stimulus. Now the administration might try and offer what they're saying, oh, now we'll give middle class tax cuts, and they'll probably argue the point that now they're against giving middle class tax cuts, blah blah blah. Well, that's not going to fly. But the point is that they may try and mask it, but it's just not going to happen, and that thing will probably be stretched out, and now the economy will have to go with however it's going to go. Anyway, going forward, the dollar strengthened versus the yen to 1370. The dollar has gained over the past week. While the Fed is on track to raise interest rates, the Bank of Japan will press on ultra-loose monetary policy because of a low growth inflation. Just one moment. And the widening interest rate differential between the US and Japanese bonds has made the dollar more attractive bet than the yen, which is often a funding currency for carry trades. Italian bond yields rise and the euro dips as after EC cuts Italy growth forecast. Italian government bond yields rose to a session high on Thursday, while the euro dipped after the European Commission cut Italy's growth forecast and said it anticipated a jump in the country's structural budget deficit. And we're seeing the euro kind of come up a little bit. Just grabbing a little scalp money from already these lows from my other position. And finally, let's go into gold. Gold dipped to a one-week low, and investors await the Fed rate call. Gold prices fell to their lowest in a week on Thursday as the dollar and stocks rose while investors digested the U.S. midterm election results. A rate increase in December is all but fully priced in. That I would fully agree with. But next year's outlook is still in flux. Now, this is where, that makes a little sense. You see what I'm saying? You know, I mean, that other thing was just absolute silliness. A confident tone is likely to weigh on gold, with a cautious one may give a bit of a lift. The Fed raised rates in September and said it planned for 4 more increases. Now, that's what I'm saying. Now, with this thought here, and with this, and oh, by the way, we've got a little gravestone doji on the 30 minutes in the cash dollar index, and we see there right against that 78%. See right there. So you're getting a little bit of a lift here on the euro. But anyway, let's just go on and go back. Higher US interest rates tend to boost the dollar and also push up bond yields. We see the dollar and stocks are a bit stronger, and that's also pushing gold down a little bit, said Ronald Loom. Dollar index, which measures the green basket against the basket of major currencies, trading in a narrow range. Next support for gold should be at the 1216, the 100-day moving average. On the upside, gold will need to close above the technical resistance of 1235. And let's go on and move into the bias chart. Before we go and start, as I mentioned before, I was just looking at these last night. This is weekly volume, and you can see here with the S&Ps, it's on an hourly, but the lines here is for the entire week. And you can see some pretty good resistance coming into this area right where we're at, and hence we're seeing a pullback. But you can see how they use this as kind of like a target. You see where prices are attracted, and then when you get to where there's been a lot of volume traded, that's where generally the market either it works as a magnet, or once you get there, you see some liquidation, because that's where a lot of volume was traded, which is just barely right around where we ran out of gas. If we were to try and push higher, the target area would be right here. You see right there coming across 28.45, but you can see all this volume coming in 45.47 right here. That's where the market, if it got one more lunge, would go to, but we're at some pretty key resistance already here. It it's more clear on the S&Ps, certainly not as definitive on the NASDAQ, which I think really probably has less to do with why you see the NASDAQ jump all over the place. And then I took a quick look here with the Dow Futures. Here's the mini Dow though. Same thing here. Any kind of push would open a target up here for 26,464, 26,460 right here. If the same, it would equate essentially, you can see here's some good volume at that same level. You see it right here, and just a hair above it, real good volume there and right there. So that's where, if they could lunge to beyond these highs, we're exactly where they'd want to go to. Once again, it works like a magnet almost. And when the reason I say this is the same thing, the market would want to resolve itself to that level the same way that I argued last week that I felt the dollar yen wanted to resolve itself to 13.89. It just, you looked at the price structure. Now the other one was looking at volume, but when you looked at the price structure, and we were talking about that, why I was saying, hey, look, it looks like this market just wants to resolve itself to 13.89. And once it gets there, I don't think it just turns around and rolls over. I just think we get there and we just kind of hang around, and bears and bulls kind of like, you know, a little bit duke it out here, and eventually we'll get the direction. My guess is direction will be lower, but I don't think you have to. Although this is a pretty good pullback from election night, but you can see it puts itself right back up, and certainly looks like they want 13.89. That being said, let's go on and move into the euro. I'm a bit surprised here that, well, yes and no, and yes, that the euro hasn't held up a little bit better, but it's holding up above the 50. Look, it hasn't even made to the 50%, yet the cash dollar index on this move made it all the way to the 78%. And you can see here that we've got like a little bit of a graystone doji, just have a little bit of wick underneath, but this is on the 30-minute. Right here. Remember, I did share in the room. I said I'd already put on the euro, but I said I'd be adding at the 78%, no questions asked. If we made that, we certainly did. And you can see there's this other lip. See right there, that little level. It almost made it there, right there, which would have been 36, 37. But we got a little bit of a gravestone doji here. Now we're starting to see a bit of a pullback. Once again, don't forget, there's just a ton of dollar long. So as I said, it's more like an ocean liner. You start to turn around and we got a little bit of a move, but you get the bigger move comes on the second turn down, not on the first one. First one, people are still going to see it as a buying opportunity, or they're not going to worry about it. It's on the second one that people start saying, uh-oh, maybe there is something here. And the third wave is where you get people just say, okay, I'm out. I'm checking out of my longs. So let's go and move into the euro. Let's take a look where we stand right here on the daily, if there's anything of significance. A little bit of a push here. We did get a pretty good little stretch. Now, if this was up in here, this would have more concern. So it doesn't, I'm saying to say, okay, now we're going to push lower. Time will tell, but right now, the key right here on a daily, we would have to defend 1388 on a daily. It doesn't mean we're going to make it down there, but that would be key. So let's go and mark that off. This would be huge to defend. Support is going to come in right there, 1405.5. Just call it 1405, which is, we just went there. We looked like we went, maybe got to 4.5. So it's 1405. The resistance on a 2-hour chart comes in right there. You see that? 35.5. That's on a very short-term basis. Let's see here. There we go. It's actually right there, 52, just above that 48. That's going to be your, and actually this is key right here. Look at that. Because you've got this medium-legged doji. And the euros continue to move a little bit higher. See that right here? After the dollar's paring back a bit from that 78%. So you got this medium-legged doji. So that's the key. You get a close above this 2-hour medium-legged doji. That opens the door. And look at that. See how key that was? Right in there. You get a close below above this, and that opens the door for us to continue to move higher. So it's going to be 1454. 1454. That'll pretty much put in a bottom short term here, where we can probably start to continue to move higher. Let's go move into cable. Probably no big changes here. We did have 3183. We had 3183 and the market ran out of gas at 3175 or 76. I mean, right there at 3167, which isn't even that far away, but that'll be the resistance. And actually, if we get past that, we're going to probably move on up to 3217. But we'll go with that for right now. That'll be resistance 3166. Oh, remember that's key on a daily. That's right. So we have that. Take a look on support. We had 3090 and the market came down at 3087. See where they found that support right there. If we hit some stops lower on this next run, it's going to be back to the old pivot. Doesn't mean they'll get there. I'm just saying that's where the market would be attracted to as a target. As I said before, it's not a matter of knowing. This is what I think the market will go to. Here, it's where's the market going to target? Whether it gets there or not is a whole nother story. But where would the market be targeting based on the next technical level? Gold kind of rebounded a little bit. Got $3 move here on gold after the dollar put that 78%. Look at this. See this. Oh, there's a little, almost like a gravestone doji after we got to the 78%. See right here. And the euro held up because it hasn't even touched the 50%. And then look, inverse rally here in the gold. Now, this is on a 5-minute chart, though. So, but once again, like I said, look how quickly things have turned around here. As a dollar. So you know the gold is just simply reacting right now. The moves right now are based on where the dollar goes. So anyway, that being said, so that's what we'd want to target. Doesn't mean necessarily get there. It may stop right here. You see that? Only a little bit lower if we were to trigger that. But the target would be 3056, the old pivot. Obviously, we get some bearish news. They'd probably take a pause there, pop up, and then turn around and assault that level and get past it. If, like I said, because we're pretty stretched here in the cable. Let's go move in now to the Aussie. Now we had 72.98 as our resistance. They made it as high as 73. So not bad, off by 2 pips so far. But This market, it now it looks like it wants to, it has enough juice to target 73.20. Now we can go with 70, which was really what we had, I think, or maybe a hair higher for election night in case things got like really carried away. So it looks like 73.20, and if you look at that, that would take out this high right there. You see that? So 73.20, let's see if there's anything. We'll give it the extra little juice right there. You see right there, that little nut right here? Right there, so-called 73.24. So that's where we'd be looking for the market for resistance. Probably get some longs to go and lay off some there. So it's going to be 73.24. Look at that thing. The thing was, remember we talked about that when the equities, U.S. equities were falling through the toilet, we weren't going to new lows here in the Aussie, but we made the point, well, look, it's so beat up, what the heck? But still, it wasn't making new lows. And we were talking about that. We go, look, the economic numbers for the last almost 3 months have been good. I go, and the prior Friday before, we just had 5.3% unemployment. Like, holy smokes, what more do you want? But we had a nice little hammer right here, but it just wasn't going lower. And now that I go, once you start to get things, if we start to see a pair back in the dollar, or once again, the thing with the Fed and the other central banks, or the perception that they would catch up, you'd see some good news. Well, we haven't even got even that good news. All I was showing here is that China will be a little bit stimulative. And look, this Aussie's just really way oversold. On a daily, though, the next key level really is not to way up here. 73.67. So this market would have 73.68. So nothing on the horizon yet, but it's key if they can close above 72.94. So that's some resistance right there on a daily close. 72.93. 72.93. So you could actually, what you'd be looking for is if they goose them up to 73.24, were they able to close above 70? If they close above 72.93, you could still want to stay bullish on an ultra short term. But if they lost 72.93, then you'd be looking for, if they get to 73.24, then they close at 72.87, then what you'd be looking at is any runs up back up here, the market will probably take those gains, and then eventually we'll have to pair back to get some more buying down here. So we get up there, but the key would be, can we close above 72.93? Right there. We'll actually go and mark this off so we don't forget it. So if you see how that stupid line still didn't get, there we go. There you go. So the key is, we're looking at 73. We've got 73.20, but we think we can stretch up to 73.24. But the key here is the daily right here. Can you close above it? See, we got to it yesterday, but we didn't close above it. If you get up to 73.24 and you close above 72.93, the door's still open for the next challenge up in here. But if you get up to 73.24 and then you end up closing like at 72.85, then any moves back up, they're probably going to try and fade it. They'd have to try and get that. At that point, you'd have to get 2 consecutive daily close above. If not, they'll open the door for us to pair back to probably to about 72 right in here. Right there, 72.30. So we end up having to come back here for some support. I mean, to get new buying. So it's going to be key right here. 72.93. We'll actually mark this up. Support, yeah, 72.35. Well, look, on a short-term basis, that's where eventually we'd have to go if we close back below 72, or if we got above and closed below. But support on a short-term basis is going to be, oh, well, that's pretty close to it. That's 72.41. Onto the Kiwi. Okay, and let's see. Daily wise, when we close above 67.18, so that's key for daily support right here. You can see that. But we're still a ways away from that. So I don't see anything of any real significance. So let's move in here. Wow, look at gold. Gold's now up to 26 now. Wow, $4 move so far on that dollar pullback. Well, we had our support here, not a support, a resistance at 67.98, and that held the market in check. You can see that right here. But we popped up, but we weren't able to get past this 98. But we're still holding. You see how we're not pulling? See, here's would be your support. You see right there? It's almost like a little spinning top, but look at that right there, that close. You see, that's where they found support. So we're still holding up, but that's 67.69. So the door's still open for them to go higher. Now, if we got a 2-hour close below that, that would open the door for a better pullback, but we didn't, and we'll pull this back. See right there, that's a spinning top, but look at that close right there. You see how the market defended that on the pullback? So you'd have to get a close below that to open the door for them to pull back further. So the door's still open for them to go higher. How much higher they can go? Well, we know we've got this resistance here at 67.98, but so far they've defended that pullback. So that opens the door. Think of it this way. You got short and you're like, wow, they should have already closed below that. This isn't good. They're holding that. So you might have your stops real tight and say, well, you know what? I'll just put my stops up here, or you'd have to widen those stops quite a bit, depending on how you wanted to do it, and say, you know what, I'll come back later, or you know what, I think we'll still top out, or we'll need to pull back. I'm gonna have to, but you'd have to push your stops out further. So where can we go to now? Actually, where they ran out of gas right there's some decent resistance. But in the thought that they could push a little bit higher and goose those stops, and everybody would have their stops right there. 68.31. You see that right here? Right there. 68.31. You can see some touches from here. You see this bar right here? And of course, obviously here, this grouping here. And look, you see right there? That's that close. You can't see it. You see these two little wicks that close right there? Right there. Right there. That's 30. And this is 31. So let's call it 68.31 as an additional stretch. But they've already come already a long way. Support in the Kiwi. Well, we know about this spinning top, but support, if they get past that, it's going to be right there, 67.35. Euro continue to move a little bit higher here. See right there. Let's go move into the dollar CAD. We have to start clipping along here because we're going to run out of time, and we're not going to run out of time. So it's all about holding here in this area. No big changes. Here's 31.33. I think we had that marked off. Yes, 31.33. If the dollar pairs back, where they're going to go to. We're looking eventually to make the 30.28 here. Any pullbacks? I mean, if you were, I wouldn't say scalping it, but there'll be a little bit of support around 30.78. But this is a test here for them to move them lower, which would come here. You'll probably get some short coming right there. Doesn't mean they won't break lower, but that'd be the area they would initially try and target. We'll move it just a bit, like right there, which would be 30.49.5. Let's just call it 30.49. I think eventually they'll get to 30.28, but where would you find some support? 30.49. Let's go on and go into the dollar Swissy, par 5 and 99.20. Well, they made it up to this par 34. Look at that. And so we're going to go par 34 with support at, for right now, 99.38. So par 34, 99.38. Wasn't sure if they'd make it all the way back there, but the dollar did get that extra support. Okay, we talked about the dollar yen. Whether it happens or not, it looks like it wants to resolve itself to this 13.89. But we've got some key fibs right there. Look at that. See that? But the dollar's already looking a little bit tired. So, right in here, this is where it looks like they want to go to. Like I said, I don't think the dollar yen is going to fall apart, but I think we hang around here, and then eventually we can get some momentum to push this lower. You're not too far away from here. Some people may start to go on and that's why I thought we'd start to take pot shots at it here. But I think in time we'll eventually work lower. Now, what kind of time? I don't know, maybe another couple of weeks or so we can really start to move way down here. But I think we'll stall in this area, and then and I don't know how long the stall will last. I don't know if it'll be like 2 or 3 days, or maybe closer to 4 or 5 days. But I think eventually we'll break, and my thought is that break will be here. But I think that we'll see the equity start to pair back, and that will open the door for this move down here. So that's why I think it's a good area here. This was the election night high. So I don't know. Like I said, it's not a bad area. Your risk, let's put it this way, is well defined. If they got past this, it's actually 14.10. So once again, if you're looking for a move, I think that eventually we'll end up working lower. And if we do get a big sell in equities, I think, or a pretty decent pullback, I think we come down here to 948. So if you're looking like, okay, well, I think I can risk 50 for possibly, 400 pips. You see what I'm saying? So that's what I'm thinking. There'll be some decent pot shots being taken here at that area. But at least initially, yeah, you're looking at 1259. So you're thinking, okay, that's, for just a little bit of extra risk from here, 6.4. So that's a little bit better than 2 for 1. But I think at the very least, I would say that's where they would start. But you'd really actually be coming back towards this 1166 on any kind of a reasonable equity pullback. So once again, not bad. That's, risking 50 essentially to make 200 right here as we go back to the pivot. So I don't see any changes here. Oh, other than this is 1389, which we've been thinking they're going to resolve themselves to. We shall find out. Still think the risk is there on a short-term basis. Support would come in right there, 1305. We still had those longer analysis from the election. I don't want to stick around here too long. Really need to get going. Nothing's changed here except that there's right there 96.36 is resistance, dollar index. I don't know why I had 95.36. It was even below this one. So we had that 96.36 in case they stretched up because it said any sales in there would be good. So I don't know why I had 95.36 when the support was 95.52. Support right there, 95.93. Gold, we had 12.23 and we made it to 12.22. It's not bad. We missed it by 70 cents. But I think I still, like I was saying at the beginning of the show, I think gold is open to go higher. And more than just open, I think that it eventually get higher. It just needs the dollar index to pull back. And we already saw a $4 rally just off the dollar index pulling back from the 78%. So I think it'll start to build itself a little bit here. I'm gonna keep the support for 12.23, and the upside is 12.30. Thirty-year bonds. Go right there. 37.01 for support. Resistance right there, 37.20 for right now. Moving into the bonds. Surprised we didn't get a bigger lift off of that Italian growth news. So support, I knew it was at risk yesterday, but it even went even further, which is not a surprise when it comes to the bonds. Support's right there, 59, 59.28. Resistance. Right here. Probably gonna be fairly tight for right now for the morning. 59.52, which doesn't it looks like it's tight, but in a sense it isn't. These boons can get away from you. But that'd be a trigger for them to move higher, 59.52. Looking at the DAX, we had 11.648 for our resistance, and the high was 11.653. That wasn't too bad. Resistance now would be right there, 11.641. Support. Right there, 11.476. Well, we're seeing the euro continue to move a little bit higher here. Look at that now, 14.24. And let's watch how this 2R bar closes here. but it looks like it's going to engulf it. See that? It's a 2-hour bar. Dollar index just weaker. As we came back, like I said, we came off of this. We showed this on the 30-minute. Got a little gravestone doji, and that gravestone doji just happened to come in at the 78%. And noted in Asia, I was already long euro, but I said I was going to add the euro at the 19. I said, you know what? Because it was looking, it kind of stalled here and looking like it wanted to, once again resolve itself again to move higher. So that's what I was saying is going to short add euro at 78%, no questions asked, regardless of where the euro's at. So it looks like it's tiring back, and obviously that worked to the benefit of gold. We saw a nice little smart rally once we hit the 78%. Look at that, $4 rally in gold as the dollar pulled back from the 78%. Bonds coming up a little bit, which if you think about it, yesterday, I saw this late in the day. I was like, well, okay, that was supportive for the dollar, but you see the bonds moving higher here. That takes a little bit of wind out of the sails for the dollar, which is still pressing a little bit lower. And look at the euro, still trying to push up a little bit higher here. We talked about this, as I said, the way I look at it, because there's so much support for the dollar for good reason, but once again, it just has to perform to the extent that I believe it should have in the bigger context of how well the economy's done. So it's like, think of it this way. When you look at it this way, you're like, well, I don't know, it looks like it's going back up. But then you look at it back here and you go, wow, I guess maybe it's kind of stalling. I mean, it's had everything go for it. It's still not, we did see a pullback off the elections. But once again, you have to understand, it's my saying is it's all relative. So if you got a ton, and I mean a ton of longs, it's not like as if they're going to run and take off. What happens is, so we get this extra high, which that was into the month, had everything going for it, and then we start losing the ground. Now the market comes back and starts losing ground. It's this, you got the first move here. Well, I don't even like to call it the first drive, whatever, okay? It's the second one they come back and go, well, this is a buying opportunity, okay? So let's play this out real quick. So you get the pullback, it's like, oh, okay, well, they came back, no biggie, okay? You get the extra pullback and go, well, that's a buying opportunity. Let me tell you, that's a buying opportunity. But, there's a little bit of concern here, okay? Like, well, maybe, but I mean, okay, we're dipping. Let's see how we react here because, this is just a pullback. We're still moving much higher. So you come back here and see everything's okay. Oh, wow, we made new lows. We took out this low here, okay? Well, we need to get close above 96.50. So technically, really, we need a 2-hour close above 96.57. So it's here where people go, we need to get above 96.57. It's this move here that gets people out. Quite a few, or not, maybe not a ton, but a lot of people. And then after that, then it's like, wow, I guess I should get out. And that takes us to here. Probably like around there, 94.30. Although I think eventually, in time, I think we're going to 92. I mean, not 92. Well, yeah, eventually 93, but I think you won't see a good bounce, a real good solid bounce until you get down around 93. But I think that eventually we're going to test 92, 92.40 eventually. This 92.54, we might dip to 40. This way I think the market will eventually go. But that kind of plays it out. Look, the market, do you think the market's going to try to give it the ghost that quick? Don't forget, remember when I talked about the euro, and we're just about out of time, I talked about the euro. Remember I said when the euro was at 123, I kept telling people, what's the catalyst that's going to move us any higher? Because it was vacillating between 123 and upper 124, although I think it had topped to 25.32. Well, now look where we are with the euro. But stuff doesn't turn around, so you have to look at it like an ocean liner. And it's just not going to turn around. I mean, we saw a pretty good dip. Then they come back, okay, everything's hunky-dory. We got 96.50. Uh-oh, we did go a bit low. And then you get this move. Then here's the next move. Although I think eventually we will end up going about 300 pips lower in time. We may not see that till January or something. But we will eventually get there. But this next move is the one that'll start to scare some bulls. Anyway, that's enough. Thanks for joining us here on the European crossover, and good luck trading.